All right. Our meeting is being recorded. The topic of our video today is going to be creating reserve accounts. These are very important to accounting people, and they are something that a full charge bookkeeper would know how to do typically. If you're with RA Tax and you've joined us today, this is definitely right up your alley. You may not need this right away, but this is the kind of thing that'll put you at the next level as far as being a bookkeeper is concerned. Reserve accounts are just critical to getting good, accurate financials. That last 2%, you have good financial statements, but you want them to be even better. You want to get to the next level. These are some of the things that get you to the next level. Also, this reserve account concept is one of those things that once you understand it, you salespeople, once you understand it, it's another one of those, wow, man, we'd be an absolute fool to run our company without this feature. And we're always looking for those features. Our competition throws out bells and whistles, sexy things, and that's what they focus on. And they've done really well with it. We have focused on nitty gritty like this because it's just who we are, right or wrong, sales good or sales bad. We focus on the nitty gritty that really matters. So this is one of those things. All right, let me introduce what we're doing here first. Let's go to a financial statement, income statement, and we'll do this year. This is the demo database, so it thinks this year is 2016. We're going to create a better database at the end of February. This one's getting old and tired. So you look at your income statement, and of course, it's called an income statement, but it shows more than income. It shows not only income. You know what? I'm going to get rid of that department. Here to budget. Let's get rid of that. Show department. Okay. So in addition to showing income, even though it's called an income statement, it shows other things like your cost of goods sold and expenses. And one of those expenses is warranty work. So somewhere on here, you might have something called warranty and callbacks, and you might have underneath it callbacks and warranty. Just depends on how you set it up. The reason why you're seeing this right here is because it was created as a parent, and then it has a child account underneath it, a sub account called callbacks. And we might see one called warranty if we had a warranty expense. How do we get a warranty expense? Well, there's many ways to get it, but you create a chart of account called warranty, and you use that chart of account when you pay for something. So whenever you buy labor or you buy parts and materials, you have an option of using a cost of goods sold account or an expense account called warranty. And that's how you would get warranty. Now, there's some debate as to whether or not warranty is an expense or is it a cost of goods sold. And really, it just depends on who you talk to. I tend to think that it's a cost of goods sold by strict definition, but it's typically found under expenses in most financial statements. So you'll typically see warranty and callbacks under expenses. But there are people that say it's a cost of goods sold. It's a result of you selling something. It's an expense because you sold something. Either one is fine. Either place you put it is fine. Keep in mind, most people don't even track it, let alone worry about putting it in the right place. So you do want to track warranty expenses, and you also want to track callbacks. And for definition, a callback is my definition anyway. A callback is when you run a service call and you charge money for it, and then you got to go back within 30 days to fix something, and you can't charge them again. And the same could apply to any work, like an installation. You install a heating and air conditioning system, and you have to go back within 30 days to fix something, and it's not billable, it's unbillable, we would call it a callback. A callback suggests poor workmanship. That's important. A callback suggests poor workmanship, like you didn't do something right. After 30 days, because we have to have a number, we have to have a certain number of days. After 30 days, we might call it warranty work. Look, it still could be poor workmanship, but at some point you have to stop calling it a callback and start calling it warranty. So after 30 days, we would call it warranty work. So if I have to come back out to your home after 30 days, we would make our repair under warranty. And how long is our warranty? It depends. As you probably know, in Total Office Manager, you can pick the warranty here. So you can enter a number of days, like 365 for a year, that your company provides. And then optionally, if the manufacturer provides something different, like a 10-year warranty, then you can put in something like that, 3,650 days for the manufacturer's warranty. And so that way you know what your warranty is and you know what the manufacturer's warranty is. And we do that in days because there are a lot of people out there that provide 30 days, 60 days, 90 days. So it's in days. And as you might know, in Total Office Manager, if you go to the customer list and look for somebody, so let's look for me, I'm in here, and you right click on that person and go to their history, you have an equipment tab, and this equipment is under warranty. This is equipment that you might have sold them. It could be equipment that already existed, by the way, but that equipment is under warranty. And if you ever work on that equipment, the repair you made is under warranty. So let's look at that. Let's open up a piece of equipment and we can see our warranty coverage here for the equipment. Now the equipment is out of warranty, obviously. And I should populate something for labor. We'll put in 2014. So that's out of warranty. That piece of equipment is out of warranty. Now let's go to menu and let's go to the history of this piece of equipment. And here we have warranty information, but not on the equipment, for each repair. So every repair, every hour of labor, every part is in here, and you'll see warranty information. Now you might notice the invoice numbers are often repeated. Like you'll see this number is the same, 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 same. Why are they the same? Well, that's because these four parts, these four things appeared on the same invoice, and each has its own warranty. So we're tracking warranty very well, better than anybody I've seen. So that's a bell and a whistle. That's one of the reasons why you'd be crazy to run your company without Total Office Manager. Now, we all know people leave us, like we saw an email yesterday, people leave us, oh, you don't have texting, you don't have this or that. If you want to play a game called Can I Find Something That Aptora Doesn't Have? You'll win that game. You'll always find something we don't have. If you're in sales, you will never win the game. And if you're a programmer, and I see Dan's joined us, he'll never win the game either. If we go to Dan and have him add every feature that anyone ever says anything about, we'll still never win the game because somebody will still come up with something we don't have. So you always have to be prepared for that. The idea is that you have so much other stuff, you'd be crazy to run your company without Total Office Manager. Wouldn't you be crazy to go out and work on a furnace today and replace a gas valve and not know if it was under warranty? Could you get reimbursed from the factory? Is there a factory warranty on that gas valve? Could you get reimbursed? Did you charge the customer when you shouldn't have? Do you have all that history at your fingertips and mobile? No. And you'd be crazy to run your company without that information. So this is how we track warranty. Now, how did it get there? Well, let's double click on the invoice because remember, 3 mouse clicks. You're crazy to run your company without 3 mouse clicks or less. I mean, who's got time to spare? So here I am in the invoice, and we can look at the warranty and how it got here. If we just slide over, we can see the warranty for each line item. They're right there. Now, that populates automatically if you fill in warranty information on the item, but you can edit each one of those because it's possible the warranty started a couple of days ago, or maybe it starts a couple days in the future. For some reason, you want to override it. Maybe you want to extend the warranty for public relation purposes. So you can edit these dates if you care to. All you have to do is just go in and change the date. You'd be crazy to run your company without this feature. That's what you always have to say to yourself is, do I have things I can make that statement with? Can I get on the internet, demo this software, and give people things that they would say, wow, man, we'd be crazy to run our company without that. And warranty is definitely one of them that we do really well. So let's close that invoice.
I have a question, if you don't mind.
Yeah, go ahead.
If it's okay. What are maybe some things where you don't have great warranty tracking? What kind of problems could that cause a company?
Well, I'll let you think about it. You go out to you think about it. I go out to Jonathan's house and I replace a part and I charge him $700, and it was under warranty. And Jonathan didn't know it, and the company didn't know it, and I just ripped you off. Or I replaced a part that I could have got reimbursed from the factory. So we just threw the circuit board in the trash, but in fact, we could have sent it back to the factory and got it replaced for free. That cost us hundreds of dollars. Or I come out to your house and I tell you you need a gas valve, and you say, I replaced that gas valve already. You guys were out here, I don't know, like 10 months ago or something, and I have no record of it. I can't prove you're right or wrong. So we sit and argue about it, and then you're mad. The customer's mad. They don't have the invoice either, but they're sure you did. But I could pull out a tablet and go to the tablet and go to the history and show you everything we ever did to your piece of equipment. So those are some of the things that benefit you when you track warranty. Also,
so you're losing a lot of money.
Yeah. Now you guys might have noticed on that history, that repair history, it showed you the customer's name. Should have left it open, but I'm going to go back to that real quick because I want us to see that. It's important. This is another thing that Total Office Manager does that I haven't seen any other program do. So we're back to, whoops, I opened it. All right, so we're back to that history form. We'll go back to the equipment tab and we'll open up that furnace and we'll go back to the menu and go to history. And notice over here, the name of the customer. Well, why would we have a field like that? People see that and don't know what that means. Well, that's because someone else could have owned this equipment. You moved into the house 5 years ago. What about the people before you? Their name would be there. So if we have taken care of a house and it got sold, bought, which is common, 4 years is the national average, 4 or 5 years. So it's very possible that 3 people have owned this house. You'll see all 3 names in there, all 3 names, because we're tracking history not only by the customer, but by the serial number. So this could be an ice machine at a restaurant, and 4 different restaurants have owned this ice machine. Very common, by the way. Most people buy used ice machines. Same with reach-in coolers and refrigerators. So it's quite possible you'll see many different names here. No other software does that. One of the biggest complaints that people have with software is when people move. And if you're in sales, you probably have heard that. Well, what do you do when people move? What do you do when people move? You have to understand why people ask certain questions. They're asking you that question because that's a pain point. And when I hear that, I know what they really mean. They mean that it's a mess dealing with people moving. What do you do with that record? You go into the customer's name and backspace over it? I mean, do we open up the customer and backspace over their name and type in Stephanie's name, the new homeowner? That would be terrible. But that's what people do with QuickBooks because it can't handle that. It wasn't built for that. So anytime you're dealing with a Band-Aid program for QuickBooks, you're stuck with QuickBooks problems where it creates even more. And that's one of them is home ownership, changing hands. But we take care of that. We got that covered. And again, there's another thing. People would say, wow, yeah, I'd be crazy to run my company without this feature. People are moving all the time. What about new construction companies? At some point, the house is owned by a new construction company, but then the new construction company, the builder, sells it to somebody. Now that ownership is transferred, if you went into this program, you would see the builder and you would see the money that the builder spent. Keep in mind, you are a heating and air conditioning company and you are doing heat and air conditioning work for a builder. You'll see the name of the builder and the money they paid you. And you'll see the model and serial numbers of everything you sold them. And all those invoices belong to the builder. But at some point, you hopefully will start taking care of the buyer, the person that bought the house. And you'll see their name here, here, here. So you'll have records going back to the birth of the comfort system. Nobody else does that I know of. Nobody else. And one of the reasons why they don't do it is because, number one, they don't know the benefit because they're not contractors. They don't have a contractor pedigree. And number two, they're busy creating features that I call sexy. And in many ways, they're smart. They may not give a damn about the customer, but they're smart. If their goal is to sell more than Aptora, then they're smarter than we are. They're more effective than we are. Congratulations. But if their goal is to give software that really has meaningful features and not some blinking light, then Aptora wins. But the trouble is people are leaving us. People don't buy our software because it wasn't sexy enough. They say, we had to have that auto paging. We had to have auto texting, which we have, by the way. Maybe they don't like it as much as someone else's, but that's because they haven't seen the whole picture. They haven't seen all these other things that we have. All right, so we're going to go one step further than all this. We're even going to get more nerdy than this, if this wasn't good enough. The trouble with warranty work is that it's hard to predict how much warranty money you're going to spend. And if you do spend money on warranty work, it's going to hurt your income statement. So here you have an income statement and things are looking pretty good. And then you might have a lot of warranty claims. You might have to replace compressors, condensing units, expensive parts, provide expensive labor. And that's going to create an expense called warranty. And that's going to hurt your financials. So it'd be nice if you could predict that. Well, keep in mind, we do have a budget feature, and you can go in and create a budget, and you can find warranty on this budget. I have a couple different warranty accounts, but you can find warranty on this budget, and then you can plan for it. So that way your budget has warranty on it, and you can plug in numbers to predict what your warranty expense is going to be. And then once you do that, you guys can't put me on.
I'm getting some on hold sound.
Yeah.
Did somebody switch their phone to on hold? Tim, did you put your phone on hold?
No, I know better than that.
Okay, you know better. Somebody don't know better.
Yeah. Can't put me on
James,
hold.
you remember when I did that to you in like one of our first demos when I was here like my first month?
Yeah.
And you ran into my office and like ripped my phone out the wall. You're like,
Oh yeah. Oh, I was angry. Yeah, I mean,
I remember that. I never made that mistake ever again.
I drowned out the whole demo.
Yeah,
So,
I
yeah,
apologize. It's my fault.
you can't do that. You gotta mute us or put your hand over the phone. All right.
Okay.
So, just want to remind everybody we do have a budget feature, and in your budget, you would want to go in and plug in a number for warranty, and that way you can run an income statement, and you can compare what happened for real with what the budget said. So you could have, imagine if this is warranty for a minute, you could have warranty expense and what was budgeted and the difference. And hopefully you'll come out ahead. But what if we could set money aside for a warranty? What if we could take the expense today for a warranty? So let's have a look at the internet and let's type in, again, this is really good for RA people. So let's type in matching principle. Whoops, I misspelled it. Let's type in matching principle. And let's go to the first one here. That's fine. Oh, Accounting Coach, by the way, is the place to go. If you want to learn accounting, accountingcoach.com. And they have a premium membership. Anyone wants it, I'll buy it. I'll pay for it. But only if you use it. Don't just say, yeah, pay for that. That'd be great. But the Accounting Coach is the single best website there is for learning accounting. So what's the matching principle? The matching principle is something that you really should be doing, number one. But most contractors don't. The matching principle just means that you need to match revenue to expenses in the period that they occurred. So when you recognize revenue, you need to recognize revenue when it happened, not later. And when you incur an expense, you need to recognize that expense when it happened. And so, according to generally accepted accounting principles, when you sell a job, you are incurring a warranty expense because it's guaranteed that you will have warranty expenses, but they will be down the road, maybe a year or two from now. But that's not adequate because that's not the matching principle. So the federal government is okay with you recognizing an expense for warranty the day you sell a job. So think about that a minute. You sell a job today for $10,000, you will have a warranty claim eventually. If not on this job, some job. So that's an expense. If you incur that expense later, the IRS doesn't like that. And neither does the accounting world, generally accepted accounting principles. They want you to match that expense the day you sold the job. And if that doesn't make sense, hit me up in a minute with a Q&A because that's really important. The matching principle, you can go read about it, but it's critical to know that, especially at RA Tax. But this is a way you salespeople can dazzle your demo people because they'll be like, wow, this company knows what they're doing. It's like an accounting company making accounting software instead of just a software company making sexy software that lacks real features that matter. So the matching principle says that income and expenses have to line up in the same period. You can't recognize income today for the job and then claim expenses next year for the job you sold the prior year. That's not proper accounting, and the IRS frowns upon it. So be sure to read about the matching principle. Hit me up if you don't understand it. It's really important for the rest of what I'm going to say. So we have to match up the income with the warranty expense. And we would do that by creating a liability. Now think about it. When you sell a system, a comfort system, a furnace, air conditioner, You're creating a contingent liability. That's what we call it, a contingent liability called warranty. And it's pretty well guaranteed that you are going to have warranty expenses. Something is going to fail, and you're going to have to pay to resolve it. Even if the factory covers it, you'll still have costs. You can't avoid the costs entirely. But mainly, I'm talking about the company warranty, your warranty, the warranty that your company provides your customers. You're going to have a cost, and that's a liability. So, wouldn't it be nice if you could create a liability that shows up on your balance sheet? So, under other current liabilities, we have dental insurance, we have health insurance, we have FICA, Medicare, we have payroll liabilities. Those are all liabilities, sales tax. Wouldn't it be nice to have a liability there called warranty or maybe warranty reserve? We have reserves for contracts, service contracts, and you should, by the way, you should add that. So we already have reserves for service contracts, which is proper accounting. It'd be nice to have a reserve for warranty work, which oftentimes is anywhere from 1 to 2% of the sale. So if you sell a $10,000 job, $100 or $200 should be set aside for warranty work. Right? So that is something that you really need to run your company. Chances are you're not going to get to talk about things like that in every demo. I understand that because many people don't want to hear the nitty gritty, but the nitty gritty is what irritates them later if they are a sophisticated company. So let's talk about how to set this up. First thing is I wrote a Word document that explains all this. And I'm going to put this Word document on the internet as a knowledge base article, as a help topic. That way people can go read it. But I'm real thorough on how to set all this up. So you'd be crazy to run your company without help topics like this, without advice like this. This is the kind of advice you only get from a highly qualified accountant or CPA and pay money for. I mean, this is good stuff. This is 1,532 words of advice for free. And the advice just happens to match the software you use called Total Office Manager. You see the advantage to that? It's like having a built-in consultant getting you to the next level of financial awareness. I'm going to click File and go to Info, and I want to show you something. Total editing time, 231 minutes. To show you how dedicated I am to training all of you, I've spent 231 minutes writing this help topic. I started on it yesterday at my desk, but I got interrupted a lot. I went home and I immediately opened up my laptop and started working on it while Susan cooked dinner. And then I ate and did the dishes because if you don't cook, you have to do the dishes and clean the kitchen. So right after I cleaned the kitchen, I went back to the table and I began working on this and I finished it at 10:30 and I went to bed. So this stuff takes a lot of time. It's really important. It takes a lot of time though. And someday I want somebody at Aptora to be doing this kind of work, writing topics like this, because this will help you guys sell software. It'll help you keep customers. It'll help keep customers from leaving. It'll teach new employees. It'll make it easier to train new employees. It'll make it easier for customers to realize just how fantastic a piece of software they own. So all this, what I'm going to do is based on this help topic. All right, so the first thing we want to do is we want to create a couple of chart of accounts. So I'll go to my chart of account list and I'll search for the word warranty so I can show you what I already made. We want to create this, and I've got several in here. Okay, so these are the accounts we want to create. First thing we want to do is we want to create an other current liability. That's what shows on our balance sheet. And we want to call it something like warranty reserve. In the description, to pay for claims made against our own company's warranty on work. So that is a reserve, a bucket, if you will, a bucket of money held in reserve. It'd be no different than if you had an envelope full of money in your desk and you set aside that money for a rainy day. Maybe your car breaking down and you want to be sure you can afford it. So you create an envelope called car repair reserve. And that's what I did here. But when it's a company, it's a liability. It's a liability because someday I'm going to have to pay out warranty work. It may seem like an asset. I guess an envelope full of money for you might be an asset. But if you think about it, it's really a liability because someday, theoretically, someday you're going to have to pay that money out. So that envelope isn't really an asset to you, it's a liability. That's how it is in business. I know it's hard to get your mind around that. But that envelope, once you write on the envelope money for car repairs, it's now a liability. It's no longer an asset to you because you don't get to go spend it on new shoes. So we create a current liability called warranty reserve. Then we need to create an expense because ultimately we're going to have an expense called warranty work, right? And we put it under the warranty and callbacks. That's what I decided to do, put it under warranty and callbacks. And then we give it a description of maybe repairs made under our warranty or a manufacturer's warranty. So if you look at our chart of accounts, there's the parent. You saw that on the income statement. And then you can see the full line here, warranty and callbacks, warranty repairs. Those are the children underneath it. So that's the first step, and it's in the instructions. But that's the first step is create your liability. Again, that's going to show up on your balance sheet. And then create the expense account and call it warranty repairs. And that's that. So I'll close those forms. That's your first step. Now I need to create a couple of items. So I'm going to go to the invoice item list. We call it that because this list contains all the things that could show up on an invoice. And then I will type in warranty to search for these items. And I'm going to open the two that I've already created. So I created these last night to make sure this all worked and I was ready. Now, by the way, if you guys know me very well, you know that I like to do double duty on all my work. Like when I do work, I try to make sure that whatever I'm doing has more than one purpose. So not only was I preparing for training today, which I take very seriously, as if I were a teacher and you're my students, and you are, and I am. But I also knew this would make a great help topic. So what I try to do is write a help topic for every class I teach. And then that way we're improving our help system on the internet. And it also has another purpose. I'm going to be doing a demo for Jonathan for a very large company that probably wants sophisticated accounting. And I'm also going to be doing a demo for Tim that I know wants sophisticated job costing. This provides more sophisticated accounting and job costing. So I'm going to use this help topic. It'll be a help topic by then. I'm going to use this, and my demo is an example of how we go to the next level when it comes to accounting. And yes, our competition has some sexy stuff. There's no doubt about it. But we had the nitty gritty. Now, not to be sexist here, not to insult the men, but the truth is, in demos, the women, if there's anyone that cares about the nitty gritty, it's the women. The women come to the demo and they want to know how you track warranty. They want to know how you issue a refund. They want to know all the little things, and the men don't. The men typically want to see the sex. So it could be, it's not always true. It could be like Bruce at Service Today. He doesn't care about sexy stuff at all. But most of the men just want to see the sexy stuff. The women want to see what really matters. And it also depends on their title. So understand who you're talking to, because you pull this stuff out, you might bore someone. But this is really the nitty gritty that I think both demos are going to like. So what we do is we create a discount item and we call it warranty reserve remove. And we give it a description like takes money out of the warranty reserve account to pay for warranty work. And then we create another item, and this has to be an other charge. And we call it warranty reserve add. And we give it a good description. Defers the income and instead puts money into our warranty reserve account so that we can pay for warranty work in the future. And I might even add a little parenthesis on the balance sheet. Get even more clear. So this is what puts money into the reserve account, that envelope, for a rainy day. And this is the thing that takes it out. Now, what makes them work is the accounts that we just picked. So on the warranty reserve add, we are picking an unusual account. Warranty reserve, other current liability, an other current liability. Strange to pick that for an income account, isn't it? And the software won't allow you to pick it if you have a certain feature turned on. This feature called Smart Account Selection Filtering would limit the choices of chart of accounts. If this is turned on, you wouldn't see an other current liability account because that's a very unusual selection. And you'll see from the tooltip that it tells you what that feature does. But if you're an advanced user, you probably want this turned off. And that's why it's a my preference and not a company global preference. It's a my preference, each user. Now, when that feature's turned off, that event gets written to the audit trail. So those of you in tech support can diagnose problems. Sometimes you'll have to go to the audit trail and see where they've turned on and off the smart account filtering to try to help you determine what people have done to screw up their books. So that feature needs to be turned off. Otherwise, you wouldn't be able to pick a liability account for an income count selection. So, as you can imagine, other charge is a sale item. You're selling this item. But the money for this item isn't going to income. It's going to a liability account. So rather than credit an income account, you are crediting a liability account, making the liability account go up. You credit income and credit liabilities to make them go up. So this item right here is what fills the bucket. Any questions on any of this so far? All right, now this is fairly advanced. Your average bookkeeper would not understand this. So if it's a little confusing, that's okay. I hope you'll read the help topic. I really hope you'll understand this. I really hope you would care enough to understand this. A full charge bookkeeper would understand this, a good one. So a full charge bookkeeper is like a master technician, a master mechanic. I tell that to contractors because contractors know what a master mechanic is. It's the highest level of being a service tech. And that's a license, by the way. And I had that license in Kansas and Missouri. I was working as a licensed master mechanic. That's like a black belt. That's why I came up with a black belt. Okay. Anyway, now, what happens when we actually go out and do warranty work? We would use the discount to get the invoice down to nothing, to zero. So we would create this using the other current liability right here. And that's what empties that bucket. So that bucket gets emptied by using this discount. You fill the bucket with this one, empty it with this one. And because it's a discount, it reduces the amount of money the customer owes us. So how would it work? We would go, first of all, we would go create an invoice. I'll do one for bogus customers so it's easy to find. And then I'll date it 01/01/2021 so I can find it easier. All right, so we sell a job. Maybe we sell them a rooftop unit. And that rooftop unit's pretty expensive. And then we have other things on the job. This and that, something else. All right, so at some point, we're ready to put in a subtotal to subtotal these out. And then we're ready to pick our warranty. Now, we want to add money to the bucket, the reserve account. We don't want to take away any because we're selling this job to somebody. Now, I set mine up as 2%. As you know, when you set up an item, you have the option of making it a dollar amount or a percent. And it takes the percent calculation from the item right above it on the invoice. So I made mine a percent because 2% is a pretty good rule of thumb. So 2% is 110.46. And we just made ourselves a sale. So I'm going to actually save it. Oops, got to pick a serial number, don't I? Oh, don't have any. Let's go to the main warehouse. And we probably have some there. Oh, we don't. Bummer. All right. Well, I'm going to pick another one. We got 23 in the main warehouse. So you notice that? Shows you how many you have right there. We got 23 of those. And there it is. All right, so now we're good. Now we can go to menu, go to save, reimbursable. Nope, don't want to deal with those. You sold serialized inventory. You want to add this? Yes. By the way, this is a great feature, a really great feature. I don't think software has this feature. I can't say for sure, but most software isn't going to add the equipment for you and automatically populate the warranty, the model, the serial. That's what it did. We sold that equipment, so it automatically added it to the equipment list for the customer. And we were looking at the equipment list earlier. Remember, we went to history and we looked at the equipment on that. So here it was. All right. So we got that equipment in there. That's good. And save. Okay. So now we have put 114.78 on the balance sheet. Let's go look at the balance sheet. Let's go to financials, balance sheet. Let's make sure we get a date in here that would make sense, like 12/31/2021. That way we pick up that transaction, preview it, and we have to go to page 2. There it is. Warranty reserve, 114.78. So you sold the job for $5,853. And the system, Total Office Manager, automatically set aside 114.78 for you. You'd be crazy not to run your company without this software. Aptora is crazy to add things like this to its software unless it wants to create good software that's not as easy to sell, that is. I keep reiterating that because, again, we don't get enough credit for our attention to detail. And that's the marketing challenge for Stephanie. That's the sales challenge for Timothy, Jonathan, Roger. That's a challenge for me as the company's president. We don't get enough credit for the attention to detail. So there it is. There's your warranty reserve, automatically added. You just have to make sure that you put that item on there. And then it becomes a cost of goods sold or an expense. It becomes part of the job's expense. The customer probably wouldn't see that because you don't itemize these invoices. When you do these big invoices, you don't show line items typically. You could also put this warranty reserve within a group item, couldn't you? So if you were to create a group item for an installation, and you guys remember group items, where you can add a bunch of things and call it one thing. So this could be called furnace installation, and it could have a bunch of things in it, like a furnace, coil, labor. One of the things you could put in here is warranty, and it would just become part of each group, and it would work the same way. So you could put them within a group item if you wanted to. So that's how we got the money on the balance sheet. Now, how do we get the money off the balance sheet? Well, we have a warranty claim. So there's a warranty claim against this darn job we did. So it turns out that these two items right here failed. They failed. And we got to go replace them at our cost. So let's go to menu and create a copy. Who's got that? That feature is really rare. When I show the copy feature, people are like, wow, that's handy. Especially when you're creating an estimate over and over and over again, and you're making the same estimate all the time. It's really handy to be able to go in and make a copy of an estimate. So don't forget that copy feature's all over the place. Generally, you don't have to change the date. It copies the date too, but this demo database is different. So I'm going to type in for an internal memo warranty call, so we all know what happened. And we didn't sell them a rooftop unit, obviously, but we did have to sell them a diagnostic fee, and we do have two parts on here, and we have a subtotal. Parts. Oh, I got those priced 444. So normally the part pricing would be in here, but I have it overridden. So let me explain what I'm doing here. We are going back almost a year later, 11 months later, because two parts failed. These two parts were part of the original installation, and they're covered under warranty. So we have a diagnostic fee that they would normally have to pay for. We have Part A, Part B, subtotal $856. This is an $856 invoice that we can't get paid for. We can't get paid for it. Why can't we get paid for it? Because it's under warranty. So the next thing we have to do is just change this item. And because I have them worded similarly, it's just right there. And I can add that. Now, I don't have enough money set aside because we only set aside like $100 and some, right? Remember our balance sheet said we only had, let's go find it. Oh, I don't have it up anymore. But we didn't set aside enough money to pay for this whole call. So we don't have enough money to pay for this whole thing. But I can quickly change that. I can come in here and make that $5, $5, $5, and make it a $15 transaction. And then I can type in $15 directly. So now I'm taking money out of the bucket, that envelope. We're removing money from the balance sheet to pay the bill. So you see, this is no different. This is no different than if you had an envelope and you reached into the envelope to pay for this. Are there any questions on this so far? All right. Now I'm handling my taxes here to make it easy on me. I'm going to just eliminate taxes. Let me have just a moment to get rid of my taxes. And since I'm keeping my work, I'm removing that just so later on it's easier to explain that to the user, because this will be in my sales database. All right, so this is our callback there. Pardon me, this is our warranty call. We went back out there, we made the repair. We can't charge anybody for it, but we do want to keep track of it. We do need to relieve inventory. We have to relieve our inventory, and we want to keep track of our labor and so forth. So we definitely want to create an invoice. And then we put the discount on there so that the customer doesn't have to pay any money. All right, so Marlena had a question. She wants to see that item. So remember, if you want to open an item on the item grid, you can put your cursor in there. I'm having trouble with it. Oh, my mouse is messed up. Here we go. Edit item. And there it is. So there's the discount. We created a normal discount item. We gave it a description to remember the customer doesn't see this. In most cases, they wouldn't see it. So I give it a description so the average employee knows what it means. Takes money out of the warranty reserve account to pay for warranty work. I made it a percent type, and I could have made it a dollar type. Doesn't matter. And then on the accounting tab, this is the important part. Rather than give it a COGS or expense account, I gave it a warranty reserve account, that liability account on the balance sheet, because this is taking money out of that account. So it's debiting that account to take money out.
And that's
All
to
right.
offset the money that was put in from the original item, correct?
That's right. Yep.
Okay.
So the original item right here, warranty reserve add, put money in the bucket. And you just forget it. You set it and forget it. You're just going to start collecting money. But then eventually, when you go to run the warranty call, you'll need to put in the warranty reserve remove, because you're going to take money out of the bucket to pay for the call. Because it wouldn't be fair to pretend like this stuff didn't cost you money, would it? Imagine if you did what most companies do and they just don't create an invoice, or they don't price the invoice out. Well, this cost you money. You went out there and you did this work and it cost you money, and you need to track it. So that allows you to do it. So that takes money out. So let's go to menu, go to save, no to reimbursables, and let's go back to our reports, financials. Let's go to the balance sheet, and let's type in 12/31/2021. Preview it. Page 2, warranty reserve. We're down to $99.78 because we used $15 worth. Now, one thing that this is doing, some of you might have realized this is reducing your income when you sell a job. So when you sell a job, you are reducing your income, which means you're reducing your net profit. That saves you on income taxes. So when you go file your income taxes are not as high as they would have been because you're setting aside income. You're setting aside income called warranty reserve. That's what that $99 is. That's income that you would pay taxes on. But you're setting that income aside and putting it into an envelope for a rainy day. And that rainy day is the warranty work. And the IRS, not only will they allow that, they encourage it because that's generally accepted accounting principles. That's the matching principle. You need to somehow figure out a way to get that warranty expense on the day you sold the job, because the day you sold that job is the day you had a warranty expense. This is how the car manufacturers do it. When Ford sells a truck, their bookkeepers, their accounting people, book a liability called warranty. Because if you have any trouble with that truck, you're going to go to a dealership who's going to repair it and send Ford a bill, an invoice. And Ford's going to have to pay it. And Ford doesn't want to have a bunch of surprises. They don't want to incur a cost and have it affect their current year. They sold that car potentially 2 years ago. So they want to expense the same day they sell the truck. So should you. And you'd be crazy to run your company without that feature. Any questions on any of that? Now, there's options on how to do this, by the way. Yeah, go ahead.
So, I missed this part, and I apologize. The reason you created it as an other current liability is so that it would not affect the income, correct?
That's right.
Okay. Thank
That's
you.
right.
Sorry.
So that's right. So let's go back to this invoice. This is where we sold the job. One of the things we sold was an item called warranty reserve add for $114. But the income account is not an income account. The income account that we selected was a liability account. So $114 doesn't make its way to the income statement. It makes its way to the balance sheet as a liability. Because out of this $5,853, we're estimating that we have a contingent liability for warranty work of $114.78. That is good bookkeeping, good accounting, because you do have a liability. Again, imagine if you sold cars, if you sold stereos, computers, if you're Dell selling a laptop, you have a contingent liability called warranty work. Because I might call and say, my laptop's not working, and you're going to have to pay somebody to help figure out what's wrong. You might even have to send somebody out here like Dell did. They sent somebody out to Aptora and put in a hard drive and reinstalled Windows 10. And it took hours, and it cost me nothing, but it cost Dell money. Now, Dell doesn't want to just write a check and have that affect their financials this year. They want to have it affect their financials the year they sold the laptop. I hope that makes sense to everybody. That's the matching principle. Virtually no contractor is doing this. I can tell you Gary Ellis would be doing it at his company because he knows what he's doing. Not to put down any contractor, that's what we're here for. We're here to take you to the next level. We don't want to just sell you software and be done with it. We would like this to be an ongoing relationship where you consider training an investment in money and time. You sign up for it, you participate in it, you take it seriously, you pay us money because we're not doing it for free. We're a business too. but we'll teach you all this. Why would you leave us for a better text messaging feature or a cute little truck icon that blinks as it drives down the map? You can open up a map and you see a little cute truck. Your customer can open up a map and see your technician's truck driving down the street. Isn't that neat? It is pretty cool. Uber's doing it. It is pretty cool, but is it really needed to run your business? Does a customer really need to be able to go into an app and find John in his service tech driving down I-35? John, the service tech in his truck driving down I-35. Here he comes. Is that really needed? Our software will send a text saying he's on his way, but it doesn't include a map with a cute little icon. But if you don't know what else you need, if you don't know the advantage to a warranty reserve, then the cute icon is what you're interested in. And that's important to understand that. They just don't know what they're missing. And that's tough for us in sales and marketing. How do we communicate this? First step is I got to show you. Any other questions about that? All right, there's another thing you can do, by the way. There's another way to do all this. And I'm going to cover it briefly because it's in the help topic. You could go to your vendor list and create a new vendor called warranty. So here I have warranty, internal use only. And then under menu, notes, I'd make a note as to what they're for. So that way, somebody goes in here and wonders what the heck this is, they can come into notes and see. Now, since this is a vendor, you can use this to create expenses. So one thing you could do is you could go to make a journal entry. So here we have an adjusting journal entry or journal entry. And we could find our liability account, other current liabilities, make this a little bigger. And we could go find our reserve account. And then we can put in a debit or a credit. Now notice when I put my cursor in here, it gives me a cheat sheet. A debit increases cost of goods sold, expenses, and assets. A debit reduces sales, income, liabilities, equity. Well, I don't want to reduce it right now. I want to put money in it. So at any given moment, I could just add some money to this account. Like I could put in $100. So I'm going to create $100 worth of warranty reserve. And I have to pick a vendor to do that because that's the rule. So I happen to have a vendor called Warranty, internal use only. That's why we created it. And I can departmentalize this if I want. So we could have residential department, warranty work. And then I can create the expense. And let me do that real quick. So here are my expenses. Warranty repairs. And maybe I create a warranty expense of $100. So I'm basically transferring money to warranty reserve and I'm creating a warranty expense manually. And if I want, I can associate that with a job. So I could come in here and find a job that had the warranty expense. So I could do this manually without the invoice. So I have that option too. I meant to make that $50. So I'm creating a liability warranty reserve, putting $100 into it. I'm not creating it, I'm putting $100 into it. And then I'm creating an expense for $50. And I'm going to put in a date here, 12/31/2021. Now, this could be year end. So my memo could be year end warranty transfer. Because at the end of the year, end of the month, end of the week, I might want to just do this in a bulk manner. So this is a manual way of doing it. And that's an option. So when I hit save and close, that basically did the same thing. Debit and the credits not equal. Oh, yeah. So $100. There we go. All right. So save and close. Now, one thing I forgot to do is I should have picked a department since this was warranty work. Oh, no. Hang on a minute. Let me tell you what I'm doing. So here is the invoice for the installation. So I should have picked residential installation for the department. And then it filled it in for me. But the very last item, didn't install. I'm just going to do it because I'm picky here. Install warranty. So what I did here is the very last item on this installation was warranty related. It's income related to warranty. So I wanted to make sure I picked the right department. The rest of this is for the install department. But the last line is warranty. So I'll change that to reflect it, and I'll hit save and close. Now I'll find that other invoice, and this invoice was warranty. Every bit of it was warranty. So I want to make sure, and I should have picked it originally. We should have picked warranty to begin with. I want to make sure that all of these line items say warranty, because that's what this is, warranty. And we could create a department called warranty. All right. So now, let's just get rid of this item. So now we even have better tracking. Now we can go to reports, financials, income statement, and I will pick 01/31/2021 to 12/31/2021. That's this year. And show income by department, you bet. What department? Warranty. Compare to budget? Yeah, why not? And hit preview. Now, I am seeing everything we have spent on warranty. Now, of course, the budget's completely wrong because I don't have a warranty budget. So don't pay attention to that. But this is the warranty expense. We had $10 in income, probably from a prior transaction that you didn't see. But this would show all of our income and expenses related to warranty. So there is a $100 expense. We created that $100 expense with the adjusting journal entry. There it is. So we took money out of our bucket and we put it on our income statement. So you could do that if you wanted to on a job by job basis using an adjusting journal entry. You could do it at the end of the year. You might just say, look, at the end of the year, I just want you to go in and make one big adjusting journal entry. You could do that. So adjusting journal entry is another option. And I have that covered in here. So in here, I have step-by-step option 1. This creates a liability account, defers income, etc. And then how to do it, and then how to use it. And then I have step-by-step option 2. This option uses a warranty account, differs. That shouldn't be a line. That should be like that. So then I explain what it does. So that way it's thorough. I've got it all covered. Now, I could have made this shorter and just told people what to do and not explained it, but I wanted to be sure that it was thoroughly explained. Any questions on any of that? All right. So some of you are, I'm sure some of you, you get it. You're like, yeah, I understand all this. I don't need to ask questions. Some of you are like, well, I don't understand any of it. I don't want to ask questions because my question would be, I don't understand any of this. Could you explain it again? Now, that would be me, by the way. And I'm not just saying that to be nice. That would be me. I wouldn't understand any of this. So what I'd have to do is I would have to go back and read the help topic and try it out. And then this class would start helping. And that's why I did so poorly in school, because sitting in a classroom was just impossible to learn for me. But it helped. I just had to go back and read. I didn't learn this till I was an adult, but what I needed to do was go back and read about what we talked about and then try it out myself. And if that's you, then, that's understandable. If you want to read more about this topic, I have further reading here, and you can go read these topics and understand more about warranty reserves and things like that. Let's click on one of these and just show it real quick. Did that open? Okay, so here I am at this website called Accounting Focus. Not real familiar with them. I hate their pop-ups, I know that. No, I don't want a good job. So here is a random website I found talking about recording warranty expenses and liabilities. And the reason why I wanted to show you this website is because I wanted you to know this is a real thing. It's really common. This guy's talking about companies that sell water bottles, but it could be furnaces. But it's a real thing. It's an important thing. And I'm going to get rid of that because I don't like all the pop-ups. So I wanted to show you that just because you need to know that this isn't isolated to just the heating and air conditioning industry. This is important for all companies that sell products that are covered under warranty. This principle, though, can also be used elsewhere. So the idea of setting aside money, remember, the IRS is okay with that. It could also be used for other things like callbacks, bad debt. Bad debt is what? Money you don't collect, right? You could also set aside money for lawsuits. If you're being sued and you might lose, you could set aside money for lawsuits. Anytime you want to reserve money for something, you could use this help topic. So it's not just warranty work, it's lots of other things. All right. So that is the story of warranty work. Now, let's do one more thing. Let's go to support and let me log in, because this is ultimately what I want to see the whole company doing someday when you're comfortable with it. I want everybody to be comfortable logging into the support site. Everyone has credentials to get in here, by the way. And if you're not sure what they are, you can ask Stephanie. But all of you are set up as contributors, so you can come in here and contribute. And what would you contribute? You could create posts and help topics and things like that. So a help topic is how to use a form, and then we have tips, FAQ, and stuff like that. Posts. I'm going to create a new post. And let's get this up. So I'm going to move this over to my other screen. And I'll show you how easy it is and why, because again, I want you to see it and we're recording this. So I'll give it a topic, creating and using warranty reserve. And then over here on the side, categories, I can pick the categories that it belongs to, and I'll come back to that. I can add tags like warranty, and I'll add that, or reserve, or warranty. So these are search tags that'll be handy, and I'll come back and do more. But what I wanted to show you is how easy it was to go in here and create a help topic. All right, so I'm copying from Word and just pasting. That's it. And then I'll go in here and let it check to reserve. I want to reserve is money. Nope, that looks okay. Guaranteed is a guarantee. Yeah, that's all right. So go in here and just double check your spelling or whatever. You notice the formatting looks really good. It formatted it. It's finding things that even Word didn't find. What differs is that it uses. So I'll fix that. That's okay. Enter. That's fine. Select your setup. It's 2 words. I do that a lot. Setup. It results in a liability. In a liability that appears on the balance sheet. Okay, so enough of that time. But now we'll publish it. Okay, so now you guys, if you want to read it, you'll go to the support site and you'll type in maybe just warranty. And there it is, creating and using a warranty reserve. And there's your help topic. Now, what you could also do is you can create your own. This is, I said a help topic. This is technically not a help topic. It's really a knowledge base article. But you can create your own. If you were to go in here and find spelling errors, you could fix them. If you saw something in here you didn't like, you can go fix it. You could fix broken links, things like that. So I want people to be able to do that if they want to, but you don't have to, of course. But it's nice to be able to go in there and fix a typo, because the time it takes you to fix a typo is probably less time than it would take to tell someone there's a typo. It'd just be easier to fix setup and hit update than it would to just go tell someone setup is 2 words. All right, so that is the story of warranty reserve. Remember, it applies to a lot of things. It's just getting money on a balance sheet, and you take that money off the balance sheet someday to pay for a contingent liability. Does anyone have any questions about anything? Could be a different topic, but just anything in general.
I put a question on the text thingy.
Oh, I didn't notice it. So the question is, can you show me how the service manager can identify the top products that are causing major warranty expenses? Once these are identified, can they see a breakup of cost, parts, etc.? So that's really a good question. Glad you asked that. We would want to go to the invoice item list, and we would want to find warranty-related items, like these guys here. So we all know that the discount item is used when you have to do warranty work. So what you would do is you would go to that item's history, and you would be able to see every sale that ever occurred under warranty. So you would be able to examine all of the warranty activity. You also could run reports by department. So any report that has a department filter, keep in mind, you probably want to create a department called warranty. Any department filter, or pardon me, any feature that has a department filter could be used, any report. But that would be the first place to go to, is look at the warranty reserve remove, because that's the thing that took money out of the account, meaning it was used when a warranty event occurred. I would look at its history, and you'll be able to see those invoices. Now, there isn't an easy way to go find parts that are constantly under warranty. We don't have such a feature, but we do have the ability to go quickly find all of our warranty activity, and we can look it over. Any other questions? Don't forget drill down too. When you preview your income statement, you go to warranty, you can double click on that, and it'll open up another report, transaction detail by account, the account being warranty, and show you all the details there too. So all of the item tracking features in Tom are used here, as you can tell, because the beauty of the way I set this up is I made items out of them. And because they're items, you have item history. And I'm going to add that to the help topic, by the way, because that's worth mentioning. So I'll do that after we're done here. All right, so I guess that's our time together. Any final questions about this or anything in Tom? All right, so remember, if you're in the accounting business, this is a must-know. The concept of reserve accounts are absolutely commonplace in accounting. If you're here at Aptora and you are in tech support, it's definitely worth knowing because it could come up. If you ever want to be a trainer, you have to know this. A trainer is like, top level support person. If you're in sales, it's kind of a burden because it's a lot to know. But if you're in sales, the more of these things you know, the more you'll tell people you'd be crazy not to run your company without this feature, or to run your company without this feature. Because remember, your competitors don't have super important stuff to talk about. They just have sexy. And it does work. I mean, I'll give them that. But you need features like this to really run your business. All right. Thanks, everybody.
Thank you.
Thank you.